Welcome back to TechKidFX for another Agix price prediction update, which at the time of this recording is breaking out to the upper side, and at the time of this recording we are holding above the 20-day MA here on the 1 hour chart, which is now acting as support. We are also trying to battle out with a key area of resistance at around the $0.039455 mark, and the moment we manage to break above that and continue holding above it, then there are high chances that you are going to continue gearing up to our next key area of resistance at around the $0.45 mark. We have also continued to obey the Elliot structures, where we have been seeing a bit of a breakdown to the lower side in the formation of this wave 2, in a move that has now managed to get into the minimum retracement area, highlighted here on the charts using this white target area, in a move that has now given us a low at around the $0.36627 mark, and all this is playing out after we fully peaked in the formation of that first wave in a move that gave us a high at around the $0.59 mark. And now my primary scenario is that whatever we are seeing at the moment is the start of an impulsive wave in the formation of this wave 3. And before I get further into the technical analysis to give you the short-term scenarios and also give you my target areas to the upside in the formation of that wave 3, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to first get to the Forex factory to show you the reason as to why we are seeing a bit of an increase in volatility in the market, where I said to you in my previous video that today I'm expecting the CPI data, which has now come out at 5%, which is lower than the forecast that we expected, and that is now bullish for the market. And that's the reason as to why we are seeing a bit of an increase in the buying momentum in the market, because the CPI has given the market a bit of a positive impact, and there are high chances that we are going to continue unlocking higher prices and fully maximize our target areas in the formation of this wave 3, and giving you my target area to the upside in the formation of this wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That now gives me a target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.8588 mark, and that is the minimum that we can expect Agix to do here on the short-term scenarios. But for that move to also play out, there are key moves that we need to keep our eyes on, and the first one is a break above that key area of resistance at around the $0.39455 mark, and the moment you manage to break above that key area of resistance and continue holding above it, and maybe even get a successful retest of that key area of resistance, there are high chances that Agix is going to continue unlocking higher prices to get us to our next key area of resistance at around the $0.45 mark. So in case this bullish movement continues, the first target that I'll be keeping my eye on is the area at around the $0.45 mark, and the moment you get to that key area of resistance and maybe manage to break through it, then we can expect another successful retest before we continue gearing up and also see a break above the significant high at around the $0.5 mark. So that is what I'm expecting here on the Agix chart on the short-term scenarios. And also taking a look at the indicators, on the RSI we are trading at around the 45 mark, meaning we have massive room for us to fully support higher prices. Also taking a look at the MACD, we have been able to print a bullish cross, fully supporting higher prices. So let's be patient and see how that plays out, and I'll be keeping you updated.